Hello guys, this is Ali. Welcome back. In this video, I'm going to be demonstrating how is it possible to re-enter the current established trend and compensate for those opportunities that I have lost. So if that's your problem, you're looking for an answer, make sure you watch this video till end. So let's get to it. Okay guys, before we begin, I have to tell you, if you haven't seen my last video, which was about the divergence, I would definitely recommend go and watch it, because in that particular video, I went into the detail, what was a divergence and how to use and apply to your chart. Make sure you watch that video before this one, because we're going to be using the concept of divergence in this video to continue with the current established trend. Let's get to it. Now, this is the gold chart, 5-minute chart. I trade gold on daily basis. Is my favorite instrument. I love it. So what I did was this. So as you can see, after market opening up a couple hours later, it went below the VWAP and it stayed there for quite time. So it proved to me that the market had the initial bias of bearish. With that, the last week market was pretty much going down, so having the bearish bias was quite right at that point. So the day went on. What I came up with, the first opportunity was this. Look what is going on here. The market is pretty much below the VWAP line. I'm looking for selling. So this was the first opportunity that I took as a short trade. Here's how I did that. Take a look at this one. The market was below the VWAP line, right? And I have the initial bearish, mindset. So I was looking for short trades, right? Now, take a look at here. The market almost, it didn't really make that much high, but it was trying to go high. It touched the VWAP, and I had the stacked imbalance at that point. But when I'm looking at the cumulative delta here, I don't see it rising. You see? Take a look at the cumulative delta. Let me draw the line for you. You see? The cumulative delta is not rising, but the price is rising. So the price is making higher high, but the cumulative delta is making lower high. What type of a divergence is this? Let me show you that. This is a bearish cumulative divergence. The price is making a new high, but the indicator is making a lower high. You see that? Indicator is making a lower high. What happened? Market moved on aggressively. There you go. That's your move to the downside. How did I take this trade? Let me show you. As soon as this candle closed bearish, it gave me a couple signs. First of all, I had single print at the top of the candle, single print. So market wants to go up, right? Then why do I see a single print there? It doesn't really make sense to me. I want to see buyers being interested. It shows me buy not interested. So the market taps into the VWAP line. I have a stacked imbalance. I have a bearish divergence. Candle closes bearish below the POC, below the value area. Fantastic, phenomenal. What I did, I went short at the opening of this candle. I put the stop loss above the VWAP, 4 or 5 ticks above the VWAP, and look what happened. Market moved on. It's quite good. Where did I exit this trade? I didn't, of course, hold till this point. I exited at this point here. This point. I entered at the opening of this candle, and I exited here. Market went far beyond my exit point, but that was a trade I took. First trade. I combined the divergence with the fact that the market was below the VWAP line and the stacked imbalance. It gave me an intuition that market had the bearish tendency, and it ended up going down. So I didn't have any other trades. I didn't look for buys, long trades, okay, because my initial bias was bearish. I was looking for short trades only, okay. Does that make sense? Next trade was about this point. Let me show you why. What's going on here? The market is making lower highs, right? Making lower high, okay. But at the same time, I'm looking at the indicator. What does it do? It's going high. Cumulative delta is going high, but the price is going down. What sort of a divergences? There you go. Cumulative delta is going up, but the price is going down, making lower highs, right? It's a bearish divergence, okay? You can see I went short there. Let me show you how did I do that. Again, what's going on here? The market was moving up. It tapped into the stacked imbalance area, okay? You see the single print at the top. Market is not willing to go higher. I have the another sign, another parameter, which is the divergence. As soon as this candle closed below the POC of it, okay, look at the delta. Also look at the delta. Okay, the candle is bearish, but the delta is positive. What does this tell me? It tells me aggressively people were buying. We had a net aggressive buyers, but they did not manage or succeed in closing closing the candle bullish. So we had more, what do you call it, passive sellers or supply. The supply was higher, okay, so the buyers couldn't keep up with the supply and ultimately market went down. I took a short trade at the opening of this candle. I put the stop loss couple ticks above this one, and as you can see the market went down. This was my target. I did not anticipate the market to go below this one. This was my target, okay. The low of that previous move was my target. So you can see the market went down a little bit here and then move up. So as soon as I close this trade here, I didn't take any other trades, okay, because my bias was bearish. I was only looking for sell trades, okay. So the market went higher, 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 boom, another opportunity. This was my other trade that I took. Here's how. So take a look at it. The market didn't make a new high here, but at the same time here, what we have is this. So you can see that we have a divergence. The cumulative delta is going down, but at the same time, the price is not making a new high, almost a little bit, well, okay, maybe one tick, but that just doesn't count as a new high, right? Anyway, this is the bearish divergence again, okay, and the market moved down. So let me show you how to take that trade. Again, same concept. Market closed below the POC, closed below the value area. If we are so determined to go up, if the wants to go up, then why did it close below the POC and the value area, and also the value area is at the top? So this tells me, okay, the market is not finding those levels acceptable, and the market closes down here. So as soon as the next candle opened up, I went short at the opening of this candle. I put the stop loss, just a couple ticks about that one. You can see the market went down a little bit, pushed back up, but it couldn't get through the stacked imbalance here, and it ultimately went down. And this level, a stacked imbalance, was my target because I was anticipating some sort of an support here, which you can see happening around here for two candles, but and ultimately market will move back up after again touching the stops below this stacked imbalance. Anyway, so that was a trade which I took. So after exiting here, I waited to get another opportunity for a short trade again because the initial bias was bearish. I did not look for long trades. So after this trade, I didn't take any other trade till here. Look at it. Market made lower high. At the same time, here you can see the cumulative delta is rising. What a beautiful sign. So I took a short trade here. This candle closed below the POC, below the value area. Fantastic, phenomenal. I went short at the opening of this candle, put the stop loss, couple things above there. As you can see, market went crazily down. Okay, as now let me tell you another interesting thing here. You can see two candles side by side. The POCs of those candles are aligned. This tells me that market has chosen this level as a strong resistance. You can see the market on the next candle tries to go up. It can't get through this one. It's in a strong level and market can get through it. Basically goes all the way down. There you go. When I went short, I knew the market was gonna go down below this level. Okay, it had to go below this level. Okay, so I stayed with this trade until I saw some sign of the buyers stepping in. This candle wasn't. Once this candle closed, I exit trade at this opening of this candle. There you go. So that was the another trade which I took. Next one was this. Here was the another opportunity. You can see this high, the market is making a lower high. At the same time, if you look at the delta here, you can see the delta here, lower high, the delta is going high. So I took another trade at this point. There you go. At the opening of this candle, I went short, put the stop loss about that one. As you can see, the market moved down quite good. I love this trade, and there you go. I actually stayed with this trade because I saw no signs of the buyers coming in yet. So I stayed with this trade. Market moved back up toward the POC and the stacked imbalance. It couldn't get through the level, and this was the sign that market was about to go down. And again, you had another opportunity to go short here because there is your market making lower high at the same time the cumulative delta rising. So I had the divergence, and you can see the market continued until boom, this point. This was in 1976, around that market, which I actually exited. So I took couple trades here, guys. I took couple trades, as you can see on my chart, and all of them proved to be right. So, and I used the divergence specifically as a confirmation to re-enter the trades. Okay, yes, I combined it with the other factors. Okay, but the divergence was there to help me to tell whether the current trend was was going to continue, or the reversal was going to happen. So in the last example here, this was my high, right? Okay, I still had the divergence here because you see the cumulative is rising, but the price going down. Here something happened. This was my last high, right? The market took out that high here, and there you go. I no longer have the divergence here. You see, my bearish bias was over. Okay, my bias was over. I was not looking to take a short trade at these pullbacks here. I didn't really take a short trade at the pullback here. No, I didn't do that. Because that the divergence was over, okay, I said, okay, I'm done with it. I'm done with trading. So guys, those were my trades, and I presented them to you. So now you know how to take trades using the divergence. It helps you. It gives you an edge over the other people. Okay, and it helps you a lot, okay, with your open trades. So if you have open trades and you are not sure whether the market is going to continue on with your current direction, okay, you can use this divergence to help that matter. Basically, stay in the trend as much as possible to take more out of the market, right? So guys, that's it for this video. I hope it was informative and you enjoyed it. Make sure you stay tuned for more videos. Thanks for watching. Bye.